Here with Kris Sidial of the Ambrus Group, joining us to discuss tail risk hedging.
Tail risk hedging is one of those really esoteric niche areas in the volatility landscape, right? Even when you think of the large allocators and investors who are in the community, even they still struggle with understanding what is tail risk and how do you really take advantage of it. So let's say you have an investor that has, investments in equities, alternatives, all sorts of things. Well, you would ask them, okay, what would happen to your portfolio if the equity market dropped, 30% in a month? And let's say VIX went to like 70. What would happen? And most people would say things like, oh, I'm in defensive stocks, or I'm in bonds or gold, or, traditional hedges like that. But what we've seen over the last 10 years is that those sort of traditional hedges have not really performed during moments of extreme market stress, right? And specifically this year too, when you think of the whole 60-40, right, that's one of the worst performing vanilla blends that we've seen this year. So you say, okay, well, how do I make money in those type of environments? And, enter in tail risk hedging, right? It's that form where, what we're doing for investors is our style of trading really seeks to generate these large returns when markets are crashing and dislocated. So in a perfect world, what this would look like is, let's say if markets are going up, we're trading, trying to be flat. And when markets are crashing, we're trying to return, 200, 300%. These like very large returns is what our goal is. So it's really there to offset the losses for an investor in their investment, right? And the sizing component is really crucial to this, right? Because you wouldn't put 100% of your portfolio in a tail risk hedge, but what you would realize is that if you put 5% of your portfolio in something like this, it becomes non-existent when markets are rallying, but when markets are crashing, the convexity is there to really offset any losses. So it's like sophisticated insurance in a sense.